Today we're going to be talking about accounting, taxes in Puerto Rico. We have Luis Lomba from HLB. This is the broadcast.
Live from San Juan, Puerto Rico. This is the Puerto Rico Business Broadcast. Now, here's your host, Daven Michaels.
Today we're going to be talking about taxes, economic incentives, accounting. We have Luis Lomba from HLB. It's great to have you here, amigo.
Thanks for having me.
Of course. And can you share with everyone what your Puerto Rico story is?
My Puerto Rico story. Well, short and sweet. I mean, I started my career as an accountant from the study at the University of Sacred Heart here in Puerto Rico, and then I started my career at KPMG back in the 90s, literally, 1990.
Here in the States?
Here in Puerto Rico.
Great.
Spent 10 years at KPMG, became a senior tax manager. Then I started my own firm back in 2001 with, a bunch of buddies from KPMG. And then we transformed the firm into what is called now HLB, which is actually a network of accounting firms all over the world.
Right.
It's just my local firm, but I belong to that network of HLB, which is an international, network of accountants.
Yeah, HLB is kind of like it's a big accounting firm. If it'd be like having a big law firm behind you, you can pull from those resources and so on and so forth, right? So if I'm doing a deal in like Denmark, is HLB international?
It's international. Actually, the headquarters are in Italy right now.
In Italy, okay. Yeah, gotcha. And so I'm just kind of curious how that works. So you're kind of under that umbrella, but it's totally your accounting firm.
That's
but
right.
You're a part of the HLB network, and they get a little piece of the action, I guess? Or?
A little bit. It's not
Okay,
much, but
okay.
it's actually, it's obviously there's a little money that into
But
the
it's
equation.
a great resource for
But
everyone
it's
involved.
more a cross-referencing thing.
Yeah, it's great for you. It's great for your clients.
Yeah, right now I got a great relationship with two big accounting firms in the U.S. One of them is in the East Coast, which is Witham, which is basically in the New York, New Jersey area. And on the West Coast, there's another big accounting firm, also over 2,000 CPAs, which is called E.I. Bailey. And those are the two major players in the mainland, but obviously we got representation in all the states.
Okay. And then I know you started your firm with several buddies from KPMG, and then a few years ago, you bottom out, right?
Well, I did. There was a little hiccup, in our relationship, and I just decided to stay by myself. They went out to go and join another firm.
Yeah. But you had a good run, 20 years.
Yeah. And actually, I'm in a better position now that I was back then. So.
Yeah.
I can't complain.
When I had my very first business, I was 15 years old, and I had an accountant at the time, a bookkeeper, I think, and I'll never forget these words she said to me. And I was 15 years old, so she said, "Kid," because I was a kid back then. She said, "If you remember one thing, remember this: partnerships are sinking ships." That's what she said. I mean, partnerships are like a sexless marriage, but no, you had a good partnership.
Yeah.
You know what I'm saying? It's like it's partnerships are partnerships.
It's hard.
Yeah, it is.
It's like a marriage.
It's like a marriage, but there's no like upside. There's no, you know what I'm saying? Anyways, yeah. But, it makes sense. I mean, that's how you started the company originally. So, yeah. So, today, you guys are in Autoré.
That's correct.
And you do local Puerto Rico. You work with a lot of local Puerto Ricans and a lot of Act 6 years, too. Yeah. And we get a lot of Act 2022 or Act 6 years. A lot of people that are interested in coming to Puerto Rico and taking advantage of the tax incentives and what have you. And a lot of those people watch this show. So can you share with people, how that works? Like, what are the benefits of Act 2022, or now it goes under the umbrella of Act 60?
It's Puerto Rico has an array of different tax incentive laws.
70 of them.
Yeah, there's a lot of them now. What they did in 2019, they put all those different tax incentives under the Act, the so-called Act 60.
Right.
But like you said, it used to be called Act 20 and 22, which were the two, principal ones that were enacted back in 2012. And obviously, it took time for those two sections to kick off and start attracting people. But now every week I'm interviewing probably 5 families or businesses that are thinking about moving to Puerto Rico. Actually, I just hung up about 15, 20 minutes ago. And the way I work, it's just basically, I receive a call and I do a little orientation as far as how it works and the requirements, and once they get, the feeling of how it works as far as the Act 20 and 22 and under the Act 60, we started the whole process of the application process within the Puerto Rico. But like you were saying, the two principal ones, which were the 20 and 22, were what we call the Export Service Act and the Investors Act.
Right.
Those two are the ones that really, kicked off the program in Puerto Rico, and that's why a lot of people are considering moving to Puerto Rico.
And so when we talk about export, if somebody has a business, does business outside of Puerto Rico, but creates the business entity here, if you will, or transfers the entity here, they can benefit from 4% federal tax through Hacienda. In addition to that, 0% dividends, and then in their investments, 0% cap gains.
Yeah.
Which is a real game changer.
That's on the Investors Act, yeah.
Yeah, and it can make a huge difference. Now, if you are you have to be a U.S. citizen to take advantage of these benefits.
You could also be somebody from a foreign jurisdiction.
You can.
Yeah, you can. I mean, if you got a visa to work in the United States, because obviously this is part of the U.S. And as far as immigration, it's just basically that you run into the same rules.
That's true. Yeah. Right.
So you can work over here, and as long as you can benefit from providing services from here to somebody that is located outside of Puerto Rico, it definitely works.
Right. Now, for the export services, if you're a local Puerto Rican, you could take advantage of that too.
Yep. Actually, I have it in my office.
Yeah.
Because I'm serving clients in the mainland right now.
That's right. Makes sense.
I actually request the benefit. So anything that I bills for customers outside, I get the benefit of the 4%.
Do you think a lot of people don't know that? Like a lot of local Puerto Ricans?
I think the word is spreading around,
Okay,
and
that's good.
I think everybody is already understanding how this works. Only the Investors Act is the one that's not available for us. That
Right.
the locals that are here, but the Investors Act, the Export Service Act definitely works.
And it's really drawing some very interesting people to the island, isn't it?
Yeah.
People that are doing some very
All
cool
kinds
stuff.
of industries.
Yeah, it's making a big difference. You were around when 931.
936.
936, excuse
936.
me. 936 was here, and that had a massive impact on the island. I would guess that Act 60 is not probably having as big an impact yet, but it's having. How would you compare the two impacts?
It's two different
It is.
scenarios. Yeah, because obviously back in the 80s and 90s,
It was a manufacturing.
It's more on the
economy.
manufacturing. So the island had a strong middle class, but it was big pharmaceuticals on the island.
Yes.
Okay. And actually, Section 936 was repealed in 1995, okay, with a 10-year phase-out period of 10 years. Guess when the recession in Puerto Rico started? 2005.
Right, exactly.
But it's totally different because obviously you got this big pharmaceuticals that were hiring massive amount of people, and some of them, are still here, like Amgen and Juncos. They got like 2,000 employees.
Right.
But the problem with that is when it was repealed, a lot of the companies left.
Yeah.
So every time one of those pharmaceuticals decided to leave the island, it was a massive layoff of people on the street. Now with the Export Service and the Investors Act, what I like the most is Puerto Rico is becoming more like a Silicon Valley kind of thing, because it's attracting more people in the service industry.
Right, and we're in a service economy.
And we're on the service economy, and I like it better because obviously you lose one client that decides to go back to the States, you're only losing a few employees versus 400 employees that got laid off in one shot.
Right.
So I like it. I like what I'm seeing because we're becoming more a service industry rather than on the manufacturing. So.
Yeah, and it is creating jobs too. Like if you look at like Evertech, which is ATH Mobile, Evertech is an Act 2022 company, and I think they employ like 2,200, 2,400, 2,600 employees, something like that. So it's cool to see the impact that's making on the island. So for our viewers that are watching that may not live in Puerto Rico, who are sitting there saying, how the heck is that possible? Like how is it that we're not paying federal taxes? Do you want to explain the mechanism and explain Hacienda and the territories and what have you?
Yeah, a little executive summary how, why Puerto Rico works. Puerto Rico, as you know, is called the Commonwealth of Puerto Rico. We're part of the United States. We're not a state, okay? And Puerto Rico, by virtue of the Commonwealth, we get to create our own internal revenue code.
Right.
Okay.
And we have our own tax body, which is Hacienda.
That is Hacienda.
Right.
Okay.
Not IRS.
Not the IRS.
Right.
Even though the IRS is also here in Puerto Rico.
Yes.
Because obviously there's some other things that apply to Puerto Ricans, which are also U.S. citizens here on the island.
Sure.
But in this case, what happens is that within the U.S. code, Puerto Rico is considered a foreign jurisdiction. Okay, so we're part of the U.S. We're considered a foreign jurisdiction, but there's a lot of tax codes in the U.S. code that apply specifically to Puerto Rico. There was one specifically that, which is the most important one, I think, that applies to everyone that's looking into this, is Section 933, which basically says that if you're a bona fide resident of Puerto Rico during the entire taxable year, you get to exclude anything that is considered Puerto Rico source income. When it comes to sourcing rules, the general rule, I mean, wages, where the service is provided. So if you're providing services from Puerto Rico, it's considered Puerto Rico source income. It's like you bring somebody from the mainland that is a software engineer that can work from anywhere remotely. Now he's providing services from Puerto Rico. Those services that he's providing are considered Puerto Rico source. So those income gets excluded from your federal return. And a lot of people don't understand, because technically, when you move to Puerto Rico, everything is business as usual. You still got to file your 1040.
Yep.
You got to comply with everything in the mainland, just
Right.
like it is.
So you file with Hacienda, and you still file with the IRS.
You file with the IRS.
But
then,
it's more informational to you.
Well, it's because remember, you can also have some other income that is not considered Puerto Rico
That is
source.
true.
That is going to get taxed at the federal level.
Sure.
So you put everything in the U.S. return and your 1040, and then you carve out whatever is considered Puerto Rico source out of the federal return. And there's some special rules for that when you look at the regulations at the federal level.
Super fascinating. So if you're watching this from Puerto Rico, you know this. But if you were watching this from somewhere else in the world, you might be saying, what the heck? So what we're going to do is we're going to take a quick break, and then we'll come right back, and we'll sort of break this down and talk about the requirements of Act 60. So don't go away. We'll be right back after this. I don't know about you, but as a small business owner, I'm super picky about who's going to be keeping track of my money. A good accountant is an asset to your business, but a great accountant is worth their weight in gold. A good accountant does your books and taxes. A great accountant becomes a trusted partner in your business. So what's important? Knowledge, expertise, communication, speed, and accessibility. If I can text or call my accountant when I need him, and he either picks up my call or texts me right back, that is gold. And that's what I get with Luis Lomba at HLB Puerto Rico. I can always reach Luis when I need him, and that is gold. If I have a problem, challenge, or question, Luis has a solution. And if I need more resources, I can plug into the HLB network of over 400 independent firms worldwide. I don't mind saying it. In my opinion, Luis Lomba is the best accountant on the island. If you want to work with someone that you can communicate with easily, that understands your needs and works like a partner in your business, call or text Luis Lomba now at 787-646-1710 or visit hlbpr.com, mention the broadcast, and get a free consultation and save 10%. HLB Puerto Rico, committed to your success. If you're looking for an event space, a wedding venue, or a gorgeous getaway, let me introduce you to the Aqua Marina Beach Club, a no-kids beach club oasis in Rincon. This gorgeous property includes a boutique hotel with 15 beautiful guest rooms, rooftop lounge, 360 view, swim-up pool bar, event spaces, coffee shop and gelateria, and a stellar restaurant. All just a few steps from the beach. I love this place. I've thrown parties and networking mixers at their pool bar, great cocktails, beautiful ambiance. I've booked rooms in the hotel for several relaxing staycations. To learn more, you can visit aquamarinabeachclub.com or call 787-823-2593 to book a stay. And don't forget to mention the broadcast to grab an exclusive 20% discount. Aqua Marina Beach Club in Rincon. And we're back with Luis Lomba from HLB. And Luis, this is fascinating, especially I'm sure for our people that are watching from other parts of the world and saying like, wow, you can really do this? Okay, so let's talk about this. So let's say you decide, you come, you check out Puerto Rico, you say, this is one of the most beautiful places I've ever seen. The food's great, the people are awesome, and the weather's great all year long. It really is, it's great. And you're like, well, I want to do this. Okay, so let's talk about some of the things, or I call it the hoops that you have to jump through. So first of all, you can't just pretend that you're living in Puerto Rico.
That's correct.
You have to live here. So first of all, what does that mean? Like how long do you have to be here? Do you have to be here 12 months out of the year, or what do you have to do?
Well, like I tell all my clients, you really have to become a Puerto Rican resident.
Absolutely, which
Yeah.
means, you have your driver's license here, you're registered to vote here, you have lots of friends here, and you're in clubs, you do things, you have your insurance here, everything. You live here. You're a real resident.
This
Yes.
this is it's like moving to any other state.
Yeah.
Technically this is where you want to live.
Exactly. Now, when it comes to qualifying for this, though, there are 3 tests.
That's correct.
There's the tax test.
Yes.
What do you call it? Time test?
Yeah, you got what we call the physical present test.
Is that time?
That's time.
Okay, so we have the time test, or it's called the physical presence test. Then we have closer connection
Closer connection test and the tax home test.
and the tax home test. All right.
Those are the 3 tests.
All right. So let's.
And you have to meet all 3. It's
Yes.
not one or the other.
Okay. So let's start with time. So, what's the minimum you have to be here?
Well, the IRS actually has a publication, okay, that you can look into it if you
I've
want.
actually read
Publication
it.
571.
I read it.
Where you can actually look at it. It's actually exclusively for Puerto Rico, and the way you can actually prove that you are a bona fide resident under
Yes.
U.S. rules.
Yes.
Okay.
Yes.
3 tests, like you said: physical present test, objective test is based on days. You can meet that test in different ways. Okay.
Yes.
You have the basic what everybody talks around on the street is you have to be minimum 183 days in Puerto Rico.
Right. So we've got 183 days.
That's one way.
That's one.
You can also do, let's say you can't meet the 183 in one day in one year, then you can go back 549s going back. So if you're on your 3rd year and you for some reason cannot meet the 183, you can do 549 going back, looking at the other 3 years.
Got it. So you could do 549 days over 3 years.
Right.
Not recommended.
Not recommended,
But
'cause
if you get in a pinch.
Yep. There's another rule that if you're less than 90 days in the U.S.
Yes.
Okay.
Yeah.
And you can prove that Puerto Rico is you have a closer connection to Puerto Rico
Yes.
and not to anywhere else in the world.
Yes.
Then you also qualify under that
So
rule.
so let's break that down a little bit. So you're living in Puerto Rico. The last few years you've been here. 8 months out of the year, 9 months, whatever it is. But in a specific year, you've decided that you want to spend some time in Europe. You're going to keep running your business. You still live in Puerto Rico. You have your house here and what have you. But you decide you want to spend 9 months in Europe. Technically, you could be here for 3, and you could be in Europe 9 months. And as long as you're here more than you're in the States, and in that scenario, you're not in the States at all, in theory,
it could work. I mean,
work.
you got to be careful because
Right, you don't wanna
obviously
play games.
You're jumping, and also you got to be careful because you're jumping onto the sourcing rules. Because remember, if you go on to Europe or anywhere
Right.
in the world, and you start providing services from over there,
Yeah.
the IRS could argue, hey, listen, this is not longer Puerto Rico source income.
Right.
So they could be an issue there
Sure.
on the sourcing rules.
Sure.
So it's. I mean, but you can go on vacation. I mean,
Yeah.
if I had all the money in the world, I'll be traveling 11 months of the year.
Right, exactly.
And nobody can take away that this is my home.
Right.
So it's like I told my clients, if you can really prove this is your home,
Sure.
and you have no other closer connection to any other place, then you should be okay.
Okay, so let's talk about the next test, and that's closer connection.
They're closer connection.
And really, if you distill down the definition of closer connection, it's kind of where the heart is.
You have to be here. You have to
be
prove
here.
that this is your place. But like you said, voting card, driver's license.
Yeah.
Remember, you get your voting card. Technically, you can't vote for the president of the United States.
That's right.
Because you're now a Puerto Rican resident.
That's right.
Okay.
Yep.
You get your voting card to be able to vote locally, driver's license. Everything you normally do when you move to any other state. You belong to a club here. You go to church here. Everything.
Yeah.
Your kids have to go to school here.
Yeah, it's like if you were married, but your wife is never here,
Yeah,
your closer connection
Ain't
is
gonna work.
not here. Right, exactly. You just don't want to play games, right? It's such a great benefit, so don't play games. Okay, and then the third one is the
Tax home test.
tax home test. Can you explain that?
Yeah, it's basically that you're working from there. You got to be able to prove that you're working from there.
Okay.
You have something in place here that you can prove that you're working.
Got it. But that could be a home office, correct?
That could be a home office.
Okay.
That could be
Okay.
a home office.
All right. So that's incredible. So then 4% federal income tax, 0% dividends, and there are even some other acts that would allow you to take the 4% down to like 2 or 1%.
Yeah, if you depending on the volume, you can go down as 2%.
As low
But
as
it's
2%.
two different things. You got the Export Service Act, which basically, like you said, is you're providing services from here to customers outside of Puerto Rico,
Yeah.
and you pay only 4%, and the dividends come down to your pocket tax free.
Mm-hmm.
There's no withholding. There's no additional tax. There's one level tax.
Mm-hmm.
Usually, what you do, you set up your entity here. Obviously, you have to assign a salary to yourself.
Yeah.
Okay.
Right.
Because obviously you got to have a reasonable salary within the company.
Sure.
That salary gets taxed at regular tax rate.
Just like
you
the
don't get the
US.
4% on that.
Yeah.
And you pay, same Social Security to the U.S. I mean, we're in the same system when it comes to Social Security.
Mm-hmm.
Okay. And then the other one, which is what we call the Investors Act, is where you get the benefits on the capital gains.
Mm-hmm.
Okay, the capital gains is a huge break, especially if you're considering an exit strategy out there. You have a company in the mainland that you're considering to sell. I mean, there's some specific rules, for those kind of assets that you have prior to moving to Puerto Rico, because obviously the IRS wants their fair share
Right.
of taxes for investments that you had prior to moving to Puerto Rico.
I think you made a good point there, or you brought something up that we should probably talk about. Okay, so let's say you spent a decade building a company and you want to come here and take an exit. You can't just come over and take that exit.
No, you can't.
So how does that work?
Because if it is a private company, like in most cases, like you're explaining, technically the way it works, you got to go by the holding period of the stock or units that you held from your company.
Mm-hmm.
So if you had 10 years, since you started your company before moving to Puerto Rico,
And you
and you waited just 1 year to sell the company, then only 1 out of 11 will be excluded out of the total gain, will be excluded from the federal return.
Right, exactly.
So
Okay.
So you want to stay in Puerto Rico and hold that investment for as long as you can. By the way, there is an exception to that rule,
Uh-huh.
that if you hold that investment for 10 years or more
Mm-hmm.
before you dispose of that investment, everything becomes Puerto Rico's horse.
Okay.
So that could be huge in case of somebody that had a good possible capital gain, and then you move to Puerto Rico and wait at least 10 years.
Right.
That could be a huge break.
Wow. Okay, so let's talk about some of the let's talk about the investors, the 0% cap gains. So what type of investments can you have 0% cap gains on?
Technically, under the Act 60, anything that is, as far as bonds, notes, anything on the crypto world, everything that is, some of that nature is included within the description of as a capital asset that is excluded under for capital gains. Real estate is not included. By the way, when it comes to real estate, the sourcing is determined by the location of the property. Mm-hmm. So this won't help you in the case of U.S. real estate. Mm-hmm. Okay, it'll be only. In the case of Puerto Rico, the only way you can get away around it is this: if you put your entity, your real estate within an entity and sell the units.
Right.
Okay, because they kind of remove real estate from the wording when the changes were enacted in 2019 under the Act 60.
Okay. So what if you have stocks?
If it's a publicly traded stock,
Mm-hmm.
okay, if you bought it and sold it after the move,
Mm-hmm.
it could be short term or long term, it pays zero tax.
Zero tax.
Okay. If you bought it before moving to Puerto Rico, and it's a publicly traded stock, you have to do an inventory, or you have to do evaluation of your portfolio as of the moving date.
Got it.
Okay, and then any increase in value happening after the move will pay zero tax. But any kind of built-in gain that you had prior to moving to Puerto Rico, you're still going to pay taxes at the federal level.
Got it. Okay, great. So I've got a heck of a lot more questions. We're going to take a quick break. We'll be right back with Luis Lomba. Don't go away. Investing and philanthropy, two things that are very close to my heart. They seem worlds apart, right? But imagine this. What if you could blend them seamlessly into one? Well, guess what? You can with Philanthro Investors. They're not just merging the worlds of giving and investing, they're pioneers linking passionate philanthropists and socially responsible investors with game-changing enterprises. How awesome is that? Doing good while doing well for others. Ready to learn more? Head over to philanthroinvestors.com or call 727-33 937-7729. Mention the broadcast to receive their special white glove service only available to our listeners. Philanthro Investors, shaping a better world one investment at a time. I'd like to share a very cool opportunity with you. Now, do keep in mind this isn't investment advice. You should always consult a professional before investing. I want to tell you about Mondax Group. Mondax provides alternative asset management and retirement solutions. Mondax takes a very patient and rigorous approach to investing, and their mission is to deliver predictable cash flows to their clients backed by strong, high-growth businesses that they invest in. Their private offering, the Axel Fund, is for reserved accredited investors only and pays out a whopping 16% dividend distributed monthly. The fund's underlying assets are independent trucking businesses contracted across the U.S. with a Fortune 50 company. So if you're interested in learning how you, as an accredited investor, can earn 16% potentially tax-free, give Jason Schur a call at 609-937-8064. He'd love to schedule a complimentary face-to-face lunch to show you all the details. For more info, you can visit mondaxgroup.com/Axel-Fund. And we're back with Luis Lomba from HLB, and this has been fascinating for me, Luis, and I'm sure people watching this, especially people outside the U.S. are going, or people outside of Puerto Rico are going, wow. Okay, so we talked about, just a moment ago, we were talking about cap gains, and so anything that you purchase once you're here, cap gains. Dividends, like dividends from a public stock, those will get taxed at 4% or 0?
No, in the case of dividends, the sourcing is determined where's the payor.
Mm-hmm.
Okay, so if it's dividends being paid by a U.S. company coming from the mainland, it's still going to pay taxes at the federal level, but you won't pay any taxes in Puerto Rico.
Got it.
Okay, because it's U.S. sourcing.
Got it. So, so it'd be 0
Puerto Rico, but you're still going to pay taxes at the federal level.
At the
as opposed to the capital gains, because what happens with capital gains, the sourcing is determined by the residency of the taxpayer.
Got it.
That's why the beauty of how this works.
Got it.
The sourcing of those cap gains becomes Puerto Rico source when you move.
Got it. Okay. So, all right. So if they're cap gains, not dividends, if they're cap gains, you're going to just pay 0 tax. But if they're dividends from a public company, you would pay it on the federal level from the IRS.
That's correct.
Okay. But now if you're doing all your business in Puerto Rico, would you be at the high tax bracket or a lower tax bracket?
Well, most likely you'll be on a low tax bracket.
Right.
Yeah,
right.
you're hardly, the company's probably, if you're running a company down here, you're going to pay only 4%.
Right.
And obviously just paying, on the cap gains, you pay 0 tax, So.
That's cool. That's really cool. Okay, so let's talk about, let's say you decide to take the plunge and you're going to be a pioneer and move to Puerto Rico. Okay. You really have 2 options, and correct me if I'm wrong. One is you move your company to Puerto Rico, or 2, maybe you create a consulting entity.
Well, there's 2 sides to the equation on that. I mean, and I've seen a little bit of both.
And let's start with just moving your company to Puerto Rico. What do you have to do?
Okay.
Yeah.
Well, like I said at the beginning, Puerto Rico is a foreign jurisdiction for U.S. tax purposes. Mm-hmm. So it's not as simple as it looks, moving a U.S. entity to Puerto Rico, because you're moving an existing business with already assets and built-in gains in there, and obviously and there might be some IPs already embedded on that company.
So how do you
so you're moving to that. Technically, there's some specific code sections in the U.S. code where you technically have to value your assets.
Right. So
just pay an excise tax to the U.S. government if you want to transfer all of those assets to a new Puerto Rico entity. Okay.
So you do a transfer pricing study.
Well, you have to value the company.
Yeah,
you technically have to value the company.
And you can't value the company.
No, I know. You have to hire a professional.
So you hire someone to value the company, okay, and then you pay an exit tax to the
U.S. government.
Okay.
That's one way of doing it. Another way of doing it is, okay, you know what? You do this. You want to transfer everything on a sale. Mm-hmm. So you do the same thing. you actually sell the assets to a Puerto Rico entity and you pay the taxes on the sale. So there's different ways within the U.S. code for doing that.
Okay.
I
You're
also
selling it to yourself, if you will, but
but
right.
you're triggering the tax at that point,
Sure.
so you're paying your dues at that time. Obviously, the IRS could always challenge, the selling price.
Yep.
But that's why you need to get documented.
Right.
Okay.
So that's one way of doing it.
Yeah, that's one way of doing it.
Two ways of doing it, actually, right? Yeah.
Because I've seen a little bit of everything. There's two different scenarios that you usually see. One of them is obviously trying to move the whole thing to Puerto Rico. The other way is that people saying, okay, I'm just going to leave my U.S. entity in the U.S. because there's some other stuff going on, and then I'm going to create a new entity in Puerto Rico where I'm going to be which I'm the owner and going to be providing management services to my U.S. entity in the U.S. You could do that, obviously, but that could be subject to transfer pricing analysis by the IRS. You need to document, the work that you're going to be performing from the Puerto Rico entity to the U.S. entity, because remember, it's going to be two related companies, and the IRS could always challenge how much you're charging from the Puerto Rico entity to the federal to your U.S. entity.
Okay.
Because it has to be what we call arm's length.
Arm's length, yeah.
So that's very important. I mean, if you're a one-man show and you're, like I said at the beginning, you're just a software developer or something like that, and you're working as an independent contractor for somebody in the mainland or different, other places in the world, you just move to Puerto Rico and you don't need to do anything. But when it comes to an existing business that has a lot of ongoing things in the mainland, you have to be very careful.
Yeah, absolutely. And the great thing is when you have somebody like you to navigate it, because you can walk them through the whole thing, through the whole process, right?
Yep.
So let's talk a little bit about that. Somebody comes to you and they want to either move their company over or start a Puerto Rico company. Long story short, they're coming to Puerto Rico, basically, right? So what are some of the things you need to do? So first you have to assess the company and what have you, and then what do you typically do? What's your process?
We do an initial interview, and once everybody's comfortable with the strategy, usually I sat down with their U.S. accountant. I mean, you get lawyers involved, you get their U.S. accountants involved.
Initial consultation free?
Yeah, initial consultation is always free. Okay. I mean, as long as it's something an introduction of how it works.
Yeah.
But once we get everybody engaged, like I said, we get everybody on the drawing board, and we come up with a plan. And once we have the plan set up, then obviously it's just a matter of we'll set up an engagement letter, we'll send them all the information, all the requirements that are needed, and I'll have my staff, taking over and just helping through the process.
Right. They have a whole production line. You have an amazing staff. So the first thing, though, is that once all that's decided, then they're going to file their acts, right?
Yeah.
And it used to be that you could do 20 or 22 or both, but now you get everything under one.
No, actually, it's a different application. You still got to submit one for the Investors Act and one for the Export Service Act.
So if you want to, if you don't do investing at all, you could not do that.
You don't need the Investors Act. If you think that you're not going to generate capital gains, because there's more requirements into that under that section rather than the Export Service Act, then you don't need both. Because like I said, the dividends from the Export Service Company are tax-free regardless whether you have the Investors Act or not.
Sure. And conversely, let's say that you're retired. You've sold your business, but you live on passive income from your investments, then you could just come and do that act, right?
Yeah, and if you trigger capital gains, is a good thing to have. Because like I said, short-term and long-term qualify for the exclusion.
And so then you file the acts, and it can, it used to take, I think when I moved here, I think it took 8 or 9 months to get it, but it's retroactive.
Everything is retroactive to the filing.
To the filing date. Now, I'm just curious, what have you seen as far as lag times recently, from filing?
Same thing.
Is it still about the same?
Yeah.
Okay, but it doesn't matter because it's retroactive.
Everything is retroactive to the filing date. The most important part, if you're looking at the Investors Act, is that technically when you look at Section 933, it says that you have to be here a bona fide resident for the entire taxable year. Some people can't make it by the beginning of the year.
All right.
Okay, so they might move in March or April, and there's one exception to the rule to Section 933 that says basically that if you meet all three tests, meaning that you meet the 183 days at least, and you meet the tax sum test and the closer connection test, and you don't have any other closer connection to any other place in the U.S., the IRS will let you treat the transition year as a full year under Section 933. So basically, they will let you use Section 933, okay, as if you were here for the full year. The only caveat to that is that technically you have to commit yourself to stay in Puerto Rico the next 3 taxable years.
Got it.
Okay, because if not, technically you don't qualify. Let's say in the second year you don't like it, you decide to go back to the mainland, then technically you have to go back and amend the first year if you were using the benefits under Section 933. So
there's a 3-year clawback, correct?
It's not a clawback, but it's technically you have to go back and amend the transition year if you don't qualify.
I see.
Okay.
Okay.
So that's pretty important that people understand that, if you don't make it by December 31st and you move before, June 30th of next year, okay, technically, if you want to use the benefits, for 2024, technically you will have to stay in Puerto Rico for the next 3 taxable years.
Got it.
In order for that transition year to use exclusion.
Got it. Now, if I recall, isn't there something about, like if you're here on December 31st of the year prior to your move, like, do you know what I'm talking about?
That's probably on the same line. That's probably on the same line,
Okay.
but I think that's the most important part.
Got it.
I mean,
Okay.
if you don't want to make the commitment of the 3-year, you have to be here December 31st.
Got it.
Okay, that's the important rule.
Got
I mean, if you want to use the benefits for 2024, okay, as your first year,
Yeah.
technically you have to be in Puerto Rico already by December 31st.
That's what I
That's the
meant.
key.
Yes. Okay. Got it. Got it. All right. So just to kind of break that down, so people understand. So essentially, if you have a company, you're paying yourself a salary, let's say, $350 a year or whatever it is. Okay, you're going to pay regular taxes on that. But then let's say you took a dividend at the end of the year of a few hundred grand, you pay 0 tax on that, right? It's pretty cool.
As long as it's related to the company that you set up in Puerto Rico, that's the way it works.
That's great. That's great. Luis, what are some of the pitfalls that people need to look at when they're doing this stuff?
I think sourcing is one of the main issues.
Okay.
I think people don't realize that if you're a one-man show, for example, and you're starting to travel around the world, you got to be careful, because one thing is you're going on vacation, and one thing is that you might be working also for work,
Sure.
and that could trigger some issue with the IRS that they could argue, hey, this is actually U.S. sourcing. Okay.
Yeah.
So you got to be careful with that, and you have to also be careful not to have your new Puerto Rico entity to be considered engaged in trade or business in the U.S. Meaning, you can't have an office in the mainland with your, Puerto Rico entity logo on it.
Right.
Okay. So I mean, there's nothing wrong going back and forth for meetings and things like that. But you got to be careful not to trigger anything that the IRS might look into and say that this company is actually engaged in trade or business in the U.S.
Right.
Okay.
Okay.
So I think that's the most important thing that because residency obviously number one. Okay, and then sourcing rules. You got to be very careful with that.
Excellent. Okay, so Luis, I think what makes you one of the best accountants here in Puerto Rico is a couple of things. One is I think you really understand business. We've been friends for many years, and when I come to you with business questions, you get it. You understand it. You've been in the trenches for so many years. You always, you know what I'm thinking, and you know what your clients are thinking, right? Also, what's great is that you're very, very accessible, probably more accessible than you need to be, but I think it makes a big difference. I know that your clients, when they need to reach you, they just send you a text, and you guys jump on a call as quick as possible, or you go grab a cup of coffee or what have you. So if people want to learn more about this and they want to get in touch with you, they can call you, right?
They can call me
or text you.
Yeah, I mean, and if I can't answer you right there, but if you leave me your phone or message,
Yeah.
I could reach out. Within 24 hours, we'll get a message from you.
And text is probably best, right?
Yeah, text is fine.
Yeah. Okay. So what's your number?
787-646-1710. Again, 787-646-1710.
Fantastic. Well, this has been a great episode. If you're watching from somewhere else besides Puerto Rico, you're probably going, wow. So I encourage you to reach out to Luis and learn more about the amazing things that are happening here in Puerto Rico. I know for me personally, it's been life-changing, and not just the taxes, but actually the business environment here. It's an incredible place to do business, isn't it? And things are changing all the time, really, really getting exciting. So anyways, my guest today, Luis Lomba from HLB. And if you want to get more information, reach out to Luis directly. And if you're enjoying the broadcast, make sure to give us a 5-star review and subscribe. And until next time, this is Daven Michaels. Live your true life adventure. Bye for now.